let me go ahead. I'm going to bring up some charts here that we can go ahead and look through, and I'm going to go ahead and explain everything that we see here on the chart here. Now, we have Spectra Energy here again. These are all daily bars and candles, so daily bars and candles, very important to understand the time frame there. But you'll see that we got 3 indicators against the chart here. But what's critically important here, guys, is this is what's called the VantagePoint Intermarket Analysis software. And what this software is able to do is analyze those global market relationships and essentially produce a forecast via these predictive indicators that you see on the screen here. Now, what I want to do for you guys, though, before we get into these indicators, how you interpret them, how you're going to use them on a daily basis, is I want to show you, if we go into the properties for Spectra Energy, this individual equity here, we can view what's called the intermarkets. Now, how VantagePoint works is it's utilizing a technology called neural networks. Neural networks are a type of artificial intelligence, type of learning machine. Now, what they're able to do is analyze unbelievable amounts of data and filter out those important statistically significant relationships. So when you think about the markets, you have to remember, it's not just all like the British pound FTSE. You know, it's not all just negative correlations. There's positive correlations where markets trade in tandem. There's those negative correlations where they trade inversely to each other. But more importantly, there's also leads in markets and lags in markets, where some markets lead the market moves, some markets lag other market moves. And this is the type of analysis that individuals, our human brains, you wouldn't have the ability to do this type of analysis, certainly not every single evening, and see the effects of it in your overall trading approach and in your overall trading process. So, you know, that's the secret sauce here. But guys, if you look at this, you know, tons of markets here. Energy sector spider, obviously critically important here for Spectra Energy. Commodity markets, crude oil, heating oil, natural gas. You've got the major indices, the Dow, the S&P, interest rates, the gold market, but then also a lot of individual stocks, which I identified some important significant relationships there. You see Chevron, Nike, Ralph Lauren, Energy, Lululemon. So now, let's go ahead and get into the chart here, because I got a lot of different examples, and this is very, very important, and this should be very, very clear for you guys to understand. Now, what I'm going to do is explain every indicator on the chart here. You see, very simple, we have 3 different indicators here. Now, this black line that you see on the chart there, now that is what's called a simple moving average. Now, let me know, guys, if you're familiar with a simple moving average, or if you'd ever used a simple moving average before. Now, simple moving average is it's simply plotting the last however many closed prices, averaging them together, and really just plotting those closed prices. So this example, this is a 10-day moving average, you know, simple moving average. So it's just taking the last 10 closed prices, dividing by 10, and then plotting that value on the chart. And that's all it does. It just rolls forward every 10 days, drops off the 11th day. So what's going to happen, and what you guys probably expect me to say next is, you know, the problem with this indicator is that it's a lagging indicator. It simply reacts and tells you where the market has already been, what the average has already been over X amount of days. So this is one of the issues that traders have, is utilizing tools that, one, only looked at what's happened already in the market, but also only look at the one market in isolation. And that's where they get really tripped up on different types of price action, which, you know, they just simply can't handle, because they're just going to react to where those closed prices are. Now, the blue line that you see on the chart there, that is VantagePoint's proprietary predicted moving average. Now, for that line to be plotted, to the value, for us to even arrive at that value, it's analyzing those 25 to 30 most closely related markets that we looked at in here in Spectra Energy. So it's looking at the ETF markets, it's looking at the crude oil and natural gas markets, the currency markets, related ETFs, related stocks, weighing those relationships, and then using that to plot the value of that indicator. Now, how we use this as traders is very, very simple, guys, and that's how it should be. You know, we shouldn't have, if tools are accurate and consistent, we shouldn't need a million of them to get some sort of good signal for us. So all we're really looking for as traders is we really want to pay attention to when we get these crossovers from the software. So when that blue line, so that predicted moving average, moves above or below the actual moving average. And how you should just think of this is, okay, well, if we're predicting average prices and they're higher than currently actual, you know, average prices are, well, that's a prediction that the market is expected to move higher. So as long as that blue line remains above the black line, you can go ahead and maintain those long positions in the market. Now, again, I get back to, I don't really care what your strategy is. If you're a day trader, if you're a options trader, Whatever your strategy is, you really need to clearly define, okay, when's the best time to get into the market, and when is the direction change happening? When is that opportunity fresh, new, and opening up for us? So there we have that crossover to the upside, and let me go ahead and stick on this predicted moving average. So I want to explain a couple of things before we move down to this bottom indicator. Now, whenever that predicted moving average starts to separate, so like I said, whenever you see that the prediction is spreading further and further away from the actual, that tells you that there's a lot of strength in that overall trend. Okay? Now, again, whenever those blue line and black line, when it crosses, you would go ahead and maintain a short position, but as long as that blue line remains above the black line, you want to maintain long. Now, you see what happens over this time period. Periods of consolidation. The market appears to be trading sideways, right? There's no clear direction that we can pull out of here unless we have tools like VantagePoint where we understand that, look, the overall direction is up. The prediction and the actual are right on top of each other, so it's not showing a really strong trend at this point. But if you're going to trade this market, you need to be looking for opportunities to the upside and maintain that position if that's what you intend to do. Now, let me go ahead and explain this indicator at the bottom, because when you understand that indicator as well, you'll understand how these two things work together to really produce a forecast to help you make better trading decisions. Again, honing in on direction, but also timing of when you want to go ahead and be adding to positions, taking positions, whatever your approach. Now, this bottom indicator here is what's called the predicted neural index. If I slide my cursor over a little bit, you're going to see that it says P index right here. Now, this indicator is extremely effective and accurate and easy to use because, guys, it can only be a value of a 1 or a 0. So yes, no, very straightforward. None of this, not a whole lot of room for a fancy interpretation here. But what this indicator does is it's looking out 2 trading days ahead. I mean, it's literally a 48-hour indicator and indicating whether there's be some short-term strength or weakness in the market. Now, this is what we're really looking at when we're talking about timing. Because if we have an indicator that's extremely accurate within a 48-hour period, letting you know, hey, should I be a buyer over the next couple days or a seller? And additionally, if you combine that with our directional prediction, essentially, you've essentially got a complete forecast that's going to help you make those better trading decisions consistently in the marketplace. So in this example here, it's very straightforward. We want to find opportunities where our blue line is crossing above the black line, right? And also that the neural index is up at a 1, confirming that directional move. And so once that happens, we can go ahead and look to take positions in the marketplace. Now, what you're going to notice, though, is that you see our neural index drops down to a 0 after this day. You get a couple more sideways action. Neural index down to a 0 after this day. You see we're still running sideways there, but the blue line never crosses below the black line. And that's critically important here because whatever your trading style is, if you're a longer-term swing trader, you're holding on to your position here until otherwise, until that blue line actually does cross below the black line. Now, additionally, you'll notice, when we get to the middle part of this move, a lot of separation between our blue line and our black line, right? Telling you, look, hold on to that position, stay in that position, ride that market as long as you can until that blue line moves below the black line. So what we've seen in this example is a really nice move higher, and this is actually interesting because we've watched this trade from really all the way back here, about an 18% move higher in the market from crossover to crossover. So when we started forecasting, the market moved up, got that very tough period of consolidation, but still forecasted the market higher. Now, what we're going to notice, though, is that this is obviously very different here, right? There's a crossover to the downside. You see, look at this weakness, so that short-term 48-hour forecast from the neural index signaling, hey, there's going to be some short-term weakness in the market. The trend had indeed changed there. I mean, we have 8, 9 trading days where the market is trending lower, neural index down at a 0, but more recently we actually just got another crossover, neural index up at a 1, so you can go ahead if you're a long, taking long positions, go ahead, take your long position again, take your profits from the 18% move, and look to trade the market again. But the whole point is that, guys, when you're analyzing these relationships and making your trading decisions in line with these indicators that are extremely forward-looking and extremely accurate, it's going to have you making better trading decisions day in and day out in the market. So I have a bunch more examples here that I want to go through with you guys, but I have a few different charts that I haven't used in this example before, but there's important concepts here that are critically important. So let me go ahead and run through this chart here for another example, but then I want to, really explain a couple of really important nuances to this, and where traders are just, they're their regular technical indicators are just going to get tripped up and have huge problems with some of the market moves we've seen. Here's Google. And again, very, very straightforward. You know, you can, if you only want to take long positions, you know, I'll actually go through with you guys how you can set up a scanning feature to only identify, you know, those upward crossovers or whatever you might be looking for in the market. But as a forecast, you know, we got to understand, you know, how is this going to affect our overall trading decisions regardless of trading strategy? Well, you see here in the marketplace, we had essentially a period of consolidation. You know, markets going sideways, not moving much at all, but you see that blue line very, very clearly indicating what? That the market direction is down over that time period. You do not want to be in a long position. Additionally, you see the neural index moving down to a zero here. You get an excessive moves lower. So when do we want to go ahead and look to take long positions? Well, just like in that previous example, we want that predicted moving average. So if we're predicting average prices higher than the actual, well, we have that come through right about there. And our neural index, so that 48-hour forecast, that very short-term 48-hour, let us know, hey, over the next couple days, should we be a buyer or a seller? Well, you see, does pretty good job. Over sideways action, you see, never even goes down to a zero, saying, look, get into that market, hold on to your position. If you're a day trader, you're pretty much in there buying every single day with that neural index supporting that trading decision. And you see that, you know, oftentimes when we get these sideways periods of consolidation, day after day goes by, the market's not moving, day after day after day after day, and then what do you get? Huge expanse in volatility, but the problem is that most traders are not on board for that. And they're not on board because they're getting impatient, they're getting out of the market, and they don't have tools that you see, you know, clearly, blue line well above the black line, neural index about as strong as it gets over this period of time, saying, look, maintain that position, but that position that you took down at 7:05. So you're getting into the markets at the right time, clearly defining the direction, but then moving forward every single day, understanding how you want to adapt to that market. If the blue line crosses below the black line, well, you're going to be able to adapt to that and make better trading decisions based on where those probabilities are based off of, again, technology and science behind this program that's going to put you on the right side of the market with a very high level of accuracy here. So a couple of examples here that are critically important that I want to explain to you guys. So pay close attention to these two examples here because this is where so many traders get tripped up and a lot of the tools that they're using are simply going to get very tripped up. Here in Edwards Life Sciences, you know, again, same thing. Very, very simple, guys. We don't want to overcomplicate these things, but blue line over black line back here at the beginning of July, neural index up at a 1, and you'll notice that over this time period, a lot of sideways price action, right? And you see the neural index warns you of that, saying, look, over the next couple days, expect some short-term weakness in the market. So when you're prepared for these sorts of things, it makes it a heck of a lot easier to maintain that position until you actually see that blue line cross below the black line. Now, this hasn't occurred yet, so we've gotten a nice move higher. And of course, great opportunity to go ahead and make some profit there. And again, just like Google, huge gap up there, but need to make sure that you're in that position, you know, before the gap, or there's no way to take advantage of it. So about a 15% move there, you know, literally on 100 shares, I mean, making about $1,500 in the last month here. So a pretty quick, nice trade there. So, you know, let me know, guys, before I go to this next example here, does this make sense to you as far as a predicted moving average? So it's plotting that line forward, letting us know the overall predicted direction of the market, and then the neural index is a short-term tool, 48 hours, guys. So, you know, if you're a shorter-term day trader, you can use that to make trading decisions, but ideally, you know, you want to define that direction, use that neural index to help you know what to expect. Me personally, I like to think of it as a throttle, right? I want to be heavier on those positions when the neural index is up at a 1 and my direction is defined, and I'm not going to be as aggressive when, you know, the neural index is down at a 0 and tells me to expect some weakness. So that's Edwards Life Science here. That's a healthcare company, right? And we see that over this period of time here, let me go ahead and highlight this, a lot of sideways price action. Actually a little down because we came from about 107, moved down about 105 area, but nothing happening there. Market over, let's see, 8 trading days, sideways and down, right? All right, so let's go ahead and move on to this next chart example here. And another pharmaceutical company, or not a pharmaceutical, but a healthcare company. Now, let's see how these are different and think about price action and how price action on a thing like a simple moving average is going to get you into some difficulties. Now, these two markets had very similar moves over this time period. See a huge move up in the middle of July there. You see the crossover back here saying go ahead, look to go ahead, get long here in angiodynamics. So about a 17% move higher, 17.5%. This is a $14 stock, so easily buying a couple thousand shares, about a $2,000, $4,000 move. But let's take a look at this price action a little bit more closely, because we see that it's almost exactly the same thing as Edwards Lifesciences. About 7 or 8 days of the market going sideways, but something very different happened in this market, right? Our blue line, that predicted moving average, crosses below the black line there. Neural index down at a 0. You see more recently getting a lot of weakness from the neural index, and the market's gapping and moving lower. And so with very similar price action, you actually see this huge candle up, making those lines separate, but how quickly the software adapts and says, hey, something's changed here. Every stock in this sector is not going up. You're going to want to be selective with which ones you're going long and which ones that you're going short. But certainly here, very clear crossover to the downside saying the direction has changed and expect that weakness in the market, whereas these other trades are exactly the opposite. Similar price action, right? Market going sideways, not much happening, but not anywhere close to that blue line crossing below the black line telling you to go ahead and short the market or go ahead and sell your position and getting a gap move higher. And so this is critically important, guys, because you need to make sure that you're in the market to capture these types of moves. You have to go ahead and take that position, take on that risk in the market so that when volatility expands, you're on board and actually making profit with the software or with your trading. So here you have, again, crossover to the upside, exact same thing. We're not overcomplicating things. We want to keep things quite simple, but make sure that we're adjusting our behavior in line with these very accurate forecasts. So you see blue line over black line, you get a little dip in the neural index, a little bit of a low there, but quickly back up to a 1, not even close to blue line crossing below the black line. And you really want to go ahead and take that position down at $42, $43 a share. Especially with your timing, you don't want to be chasing these things down late, because what happens is if you're late on a trade, you get in 3 or 4 days, 3 or 4 days late, you get into the market, and now the whole risk reward of the trade is off. And so if things change, now you've got a lot of risk out there, whereas when your timing's better, you can go ahead and lock in those stops at break even, trail your stops up with the market, and take advantage of these sorts of opportunities. So you see here in Garmin, as long as that blue line remains above the black line, you want to go ahead and hold on to that position, about a 32% move higher. But, obviously most important is, are you in position, ready to go ahead and understand that, hey, there's about 20% move higher, coming in this market. You never know where these things are going to break out, but if you're constantly making trading decisions in line with the highly accurate tool like VantagePoint here, it's going to make a huge difference, get you into those trades earlier, but then also have the confidence to hold out on that position, to sit on your hands on those 4, 5, 6, 7, 9 trading days where the market's just going sideways, consolidating, understanding that, look, the odds are where they are. If the market reverses, go ahead, get out. But if that blue line's above the black line, you don't want to miss out on those opportunities. I mean, that's what hurts, a lot more when you start making money in the markets, is any opportunities that you don't make and don't take advantage of can really hurt your P&L and what you're looking at the end of every trading month and year and things like this. So, so I think you guys understand this. I mean, it's very, very straightforward, very simple interpretation. In 5-10 minutes, you guys can understand how to interpret the software. But let me go ahead and we'll do an example here together. I'm going to go ahead and I got a chart here open. We're in a downtrend here. I've zoomed in on everything, but I'm going to roll this forward. And I think you guys understand the direction, right? Blue line over black line, predicted moving average. If we're plotting that forward and predicting higher or lower, you can determine the direction. But guys, let me know as far as timing. When it looks like it's time to go ahead and get long the market, go ahead, type buy, long, whatever into that question box, and let me see if you guys can get this timing down as far as when you want to be entering into these markets. So blue line below black line, right? So downtrend. This is all the way back in June. Another day goes by, another day. Another day. So the market's just moving lower. Forecasts obviously still lower. Now, neural index pops up to a 1 there, so interesting, saying some short-term strength in the market. But, you never got that blue line over black line now, did you? So you weren't going long there. if anything, just trying to take a better price on a short position in line with the direction. So direction still down, okay. I see them all coming through, guys. You guys are getting it. Long, long, buy. So this is the key, guys, is, if you're looking at the news or fundamentals, other information, it's really going to affect your timing in the marketplace. And so what VantagePoint allows you to do is recognize these opportunities right when these crossovers occur. There's actually a scanning feature in here called Intelliscan. And so what that's going to do is, instead of scanning for chart after chart after chart looking at these crossovers, because I trade literally hundreds and hundreds of stocks, right? So you're not going to have to scan through every single chart looking for these crossovers, looking for an opportunity. The software is going to scan through all of that for you and only present you with the opportunities that are doing that right there. So you can go ahead and set the software to find and identify those opportunities for you. And so that really gets to, what you're doing as far as how are you identifying these opportunities? Because, you may find a market and say, my goodness, this market's going up, I want to be long. But what does it matter if, your timing's off? It makes no difference. So any market that you want to get into, you want to make sure that that timing is exceptional here. So you see, same thing, guys, as all these other examples, blue line over black line. When the blue line's below the black line, you want to be short or out of your long position. When these things line up for you, you want to go ahead and take those positions and get into the market. And again, just adapt to what those predicted moving average, that blue line, is telling you as far as direction, and that short-term strength or weakness, helping guide you over those trading days moving forward when you're actually interacting with the market, have those orders in. So about a 15% move higher, about $22 per share. Excellent moves. Now, I talked to you guys briefly about the scanning feature, and this is what really cuts down so much of the time as far as doing your market analysis. I get the impression from a lot of traders that I talk to that, a lot of guys are spending all day staring in front of the computer and still not seeing the results that they'd like to see with their trading. So, even if I was, spending 10 hours a day but not, making much money, it's really not worth it. So, you want to be able to spend that time focusing on the right markets, the markets that are going to feed you your profits, and not wasting that mental effort on, kind of figuring out what the market's doing in any kind of, given time period, just by sort of looking at the charts or thinking about it for a while. But let me go ahead. I'm going to open up this other portfolio here to show you how this scanning feature works, because this is phenomenal. Saves a ton of time. So you're going to see all the charts start loading up here. And what I've done is I've opened up this portfolio here, and this is full of service sector stocks. Now, guys, you can set up a portfolio with whatever you want. It really doesn't matter. If you want to, like, highly liquid options markets that you want to fill into that portfolio, great. You can just put those markets in there. If you want to separate them by sector, so you see here with the U.S. stocks, we've got everything split up by sector. You can set up a portfolio that's up those energies, those financials, whatever it is that you want to look to trade. We also do forecasts for the Forex market, the futures markets, about 60, 70 futures markets there, about 30 Forex pairs, as well as Canadian stocks, India, UK, Australian stocks. So the technology is applicable to really trading markets all over the world, and that's actually quite key. Is it means you're actually tapping into how markets and people are interacting with them, rather than some sort of gimmick that maybe works on a market condition for one period of time, but then completely breaks down and isn't nearly as effective once those market conditions change. But here we have these service sector stocks. Let me get back to the point of this scanning feature, because this is what's going to save you a ton of time and help you identify the right markets to get into. Now, if we want to go ahead and scan for these crossover conditions, you see I've opened up this Intelliscan. You can set these for whatever criteria that you want to look for, but obviously, off of those, predicted moving averages, whatever your individual trading strategies. Maybe you're a day trader, maybe you're an options trader. You can customize the software to look for exactly what you want. But as far as the interpretation and what we've just gone through, we really do want to keep the VantagePoint side of these things quite simple. All that heavy analysis is really handled through those neural network process to produce this output for us to make trading decisions. So I just went ahead and set the crossover condition to 1, right? So let's say we want to see those fresh crossovers from the software, right? You see, we scanned through 160 markets here. We found about 13. So very quickly able to drill down on, okay, what do we want to look for? Do we want to be taking long positions? Do we want to be taking short positions? Well, let's go ahead. We actually got more longs here. Let's go ahead and set this to down neural index over at a 0, and we can see, individual markets showing us new opportunities to possibly go ahead and trade. So this, guys, is what's going to cut down on a lot of this analysis time that you're doing. I see someone asking about some of the intermarkets. Sure, yeah, I can bring up some of these things, but as far as the scanning feature goes here, guys, this is what's going to cut down on a lot of the time of doing that sort of analysis for, whatever you're doing, looking at recommendation services, looking through fundamental news, looking at earnings reports. You can really break down that to what's going to help me make better trading decisions in the market. Put yourself out of work as a trader. Put it so that you're not spending all day doing this analysis, but still seeing the type of rewards that you'd like to see through your trading. So I had a question about, let's see, it was Alan here asking about the intermarkets for Amgen. So yeah, let me go ahead. I'll pull those up if you want to see those. Again, important to understand here, guys. Every market that's forecasted for within VantagePoint. So if we're talking about Apple stock, JCPenney, Google, Amgen, whatever it is, it has its own unique set of intermarkets. So its own unique set that's been determined by that neural network process to affect and influence the one target market that you are trading. So in Amgen here, you see a lot of ETF groups, obvious things like healthcare spider, biotech spider. You've got the growth ETF index, the S&P, a lot of those big macro currency markets, crude oil, as well as healthcare stocks. You got Biogen, Celgene, some consumer staple here, some service companies. So this is what that neural network process is actually identifying those significant market relationships. And again, a lot of these relationships would be very hard to even identify by just comparing a chart, because these things have big leads, lags in the market. Some are positive, some are negative correlation. And what that neural network process does is produces a one singular output, a one singular accurate output into these indicators to help you make better trading decisions. But those are based off of, again, these global market relationships, which are really driving and impacting the markets that you're trading. I see Harish here. And Rich, I think, was asking about a currency market. So certainly the software works for the currency markets as well. I got US dollar yen here, so we can go ahead and expand this out a little bit. This has been huge in the markets. The Japanese yen and the Nikkei have huge effects on the S&P 500 and individual stocks. But we see since that blue line crossed below the black line here, this is the most recent trade going on. I think the yen's at about 101 right now. Last move's about a 529 pip move lower. That's about $5,000 per standard lot, per standard contract there. Currency futures markets as well, crude oil, all that. So whatever markets you trade, you can apply this technology. You can benefit from those extremely accurate forecasts.